Hey stream viewers, if you're outside of the United States, I have a cool offer I want to tell you guys about thanks to our partnered broker, 8cap. 8cap is currently offering the ability for new depositors to get access to our premium tool, the EdgeFinder, completely for free. Now, how this works is basically you create an account and deposit a certain amount of money into that account, and they will essentially buy the EdgeFinder on your behalf. So it's a win-win-win. They get a new client for a reputable brokerage, you get access to the EdgeFinder and a great brokerage to trade with, and you'll be supporting the show by signing up with 8cap. Now, here are the steps if you want to find out more about this specific offer, but make sure to follow them specifically as we list them out on the screen here. Step 1, navigate to a1trading.com/8cap. That's a1trading.com/8cap. Step 2 is to follow the instructions and to make sure you use the specific link on that screen to sign up for your new 8cap account. Step 3, complete the required deposit amounts and contact their team as instructed on the page. So if you're interested in finding out more about this offer, head over to a1trading.com/8cap, and we'll also be dropping the link to this down below in the live stream chat as we speak. Like I said, make sure to follow those instructions specifically if you'd like to get access to a free copy of the EdgeFinder if you meet the deposit requirements as listed on the website. Full information, like I said, can be found a1trading.com/8cap. Now back to the stream. Good morning, everybody. Welcome back. Hope you're doing well. Happy Friday to you. And we've got another red day. VIX is up. Go figure. Red day. Oil's got to be up. There's oil back towards that $100 a barrel on WTI side of things. Brent crude is well above 100. We're at 104 now. And I think the market is settling in here. What I mean by that is I think the market is kind of like, all right, this is not going away. And, you know, the resolve there is to de-risk. We've been talking about this. We have seen this pattern. This is the third week in a row, by the way, that this has been the pattern. I guess fourth or even, no, really fourth week in a row. We're up on Monday, positive green in the beginning of the week, and then we just give it all back, right? Strong out the gate Monday, give it all back. Strong out the gate, give it all back. Strong out the gate, give it all back. And that seems like the Friday pattern right now. Fridays are big sell days, at least in the market's perspective, because you're going into a weekend in which, you know, guys, we could wake up on Monday and there could be a ground invasion taking place. It is very possible. And so, you know, we've seen continued uncertainty on this topic, but even the latest from the Iranians rejecting the ceasefire offer, you know, the 15-point plan put forth by the administration in the United States. Iran kind of said, nah, we're not doing that. And of course, Iran's demands are also incredibly steep. So, you know, you have this circumstance where you very well could go into a very, very difficult weekend. So it's one of those things. We had a lot of our, you know, a lot of our really, really solid grounds for why the stock market was so strong for some time have kind of withered away here recently. Like specifically, and please do me a favor, don't spam the chat. And because I was going to look at gold. This guy putting gold in here over and over. I was going to look at gold, but because you spammed it, you ruined it for everyone. I'm not going to take a look at gold just because of you spamming it. Please don't spam. Okay, so with that said, you have a situation where stocks have lost a lot of their win conditions. Let me explain. The Fed no longer going to cut rates. At least it would be very hard for them to cut rates given oil prices doing this. This is going to be inflationary. The gas price is going up. Everyone knows that. That's a circumstance in which inflation is going to be deeply enrooted in this situation for a while. Even if the ceasefire happens, you now have inflation that is going to come through the system. It's got to work through. Now, if this geopolitical situation keeps going, then that inflation could get even worked or even worse, right? It takes time for inflation to work through the system. High prices, even if you have oil come back down tomorrow, even if oil crashes 20% tomorrow, sure, the market would sigh a breath of fresh air and say, all right, cool, we're at least cooling off. But it would still take some time for that inflation to work itself through the system because gas prices are up. Infrastructure takes time to rebuild. Infrastructure and energy supplies take time to repair, even if you get a ceasefire by Monday, right? And I think that right now the market is saying, so we have inflation expectations rising. You have this whole geopolitical situation could blow up again over the weekend. Like that's the theme of, the last few weeks is Fridays get sold hard because people are like, I'm not holding this market into the weekend. What if we wake up on Monday and there's a ground invasion, right? And understand if you get that headline, stocks are not going to like that, right? That is going to be probably a down 3+% type of day. And I know that people are saying, oh, the markets are already pricing that in. Well, they're pricing in the possibility, but if it happens, the markets will not like that. They will not like if a ground invasion actually takes place. Nick, what do you think about cash secured puts on Uber? I like that play personally. I do like Uber shares. So Nasdaq's down 1%, S&P 500 down 0.8, Dow Jones down 0.8, Russell's down 1.2. You've got everything red here today. Again, dollar index is up. Dollar has been a winner in all this. VIX also up a lot. Look at the VIX back above 30, guys. VIX at 30, that doesn't usually feel good. That usually feels like a lot of pain, especially if you have high beta stuff in your account. If you're somebody who has, I was looking at a stock, Reddit, right? This is a, kind of a popular crowd stock. I mean, this thing's gotten waxed 56%. Another popular crowd stock is SoFi. SoFi has gotten torched, down 52%. Palantir also gotten hit hard, down 30%. Even the big ones, and this is the next part. Look at Microsoft. Look at Microsoft. Microsoft is down 34.5% from the highs. Microsoft, the big boy, right? This is a huge company, down almost getting cut by a third, right? That is a no joke sell. You also have even, the big safe quote unquote ones like Apple, down 12%. Actually, that's pretty good considering. Google's down 18.5%. I checked this morning, or no, 20% this morning. It was down 18% yesterday. Now down 20 to 21% today, right? You are getting some huge sell-offs. And what we could do is we could look at the Magnificent Seven as a collective group. And you are looking at the Mag 7 down 17%. These are the biggest, most profitable, most powerful companies on the planet. And they're getting hit hard. So you look at this and you say, okay, what's going on? Why are people selling so aggressively? Fed's not going to cut interest rates. Oil prices are spiking. Inflation seems to be coming back. And by the way, the Mag 7 they were already hurting because they're all spending so much money and have gone from light spending companies, high profit companies, to high profit, but now also high spending. And so the edge of these companies, the appeal to buying Meta and Google, right? I still love these companies, by the way, but I'm just pointing out the story has soured a little bit because they're spending so much money investing in AI. And investors are like, well, what if there's not that pot of gold at the end of the rainbow, as much of a pot of gold, let's say, as people had thought? What if the payout in AI is not as big as people had hoped for? That was already going on. People were like, Meta, Microsoft, they're spending so much money. They're spending tons of their, free cash flow. Instead of giving it back to shareholders in the form of share buybacks or dividends, et cetera, they are investing it into AI. And personally, I'll go out on a whim. I say I think it's the right thing to do, to actually be spending money investing into AI and being ahead on that. I think that's the right thing to do. But the market itself is very short-term thinking. The market wants profits and they want them right now. They want payoffs. They want ROI. If you spend money today, they want money right away tomorrow, right? They want return. Whereas a lot of times, very innovative companies are more long-term natured. They need to be, right? Sometimes the right thing to do is, short-term pain, long-term gain. And some people would argue that that's kind of the goal here with some of these, crazy things that are going on in the world right now with the administration, right? Again, I am not staking my claim here, but I've heard the concept is to short-term pain in the Middle East to long-term hopefully create some kind of, semblance of resolutions in the region. Now, of course, critics would immediately say, well, that's been tried for decades and there is no resolution. But at least that's a theory. So, you have all these things going around, but the short-term mindset of the market doesn't like, hey, we're making these short-term painful decisions to produce a long-term scenario. Like, for example, the tariffs, right? Tariffs, short-term pain, long-term gain, question mark, right? Maybe rebalancing U.S. trade is ultimately in favor of the U.S. Maybe that is the long-term right thing to do, to right the ship in terms of trade deficits. Short-term, though, painful for the stock market, painful for the economy, et cetera, right? We saw a really steep drawdown last year because of that. Long-term, could it be the right thing to do? But again, when we're talking about trading, we're talking about markets, we're talking about here and now. Markets they don't give that kind of grace. They don't say like, hey, long-term, that could be a positive. They think right now that's terrible, right? So in the meantime, risk assets, Bitcoin, Ethereum, Nasdaq, stocks in general are getting torched because this situation, US, Israel, Iran, is very much inflationary and could hurt, the consumers of the globe, which could ultimately hurt the earnings, right? If gas prices are up a bunch, that could hurt the earnings of companies. Think, for example, Starbucks, right? I heard this as a good example. Starbucks, right? This is one of the first things that people would likely cut from their spending. Let's think about the normal person out there. If your gas price, if you're kind of, you're hanging in there, but you're paycheck to paycheck for like most of America, like you have maybe a little bit on the side, and once everything is paid for, like that's just the reality of this world. It's expensive out there. But let's say you spend everything and you have a little, and after paying for gas, paying for groceries, paying for rent, et cetera, you have a little bit left over. If gas price is 2x, right? If you go from paying $2, you go to $4 per gallon, and I'm just giving a local example. It's like $3.85 in where I live right now. If you have this situation, guess what you cut out of your spending bill? You still need shelter. You still need energy, right? You still need to pay for your gas. You still need food from the grocery store. You cut out things like Starbucks. Guess what else you cut out? What people cut out right away? Things like DoorDash, right? I'm just going to make food. It's cheaper, right? That's what people start to do. And then if that keeps going, they stop traveling. So maybe they don't do as many flights, right? Maybe they don't, fly as many times. Maybe they don't go to, maybe they don't stay as many hotels, right? So you can start seeing how this domino effect can take place. The longer this event in the Middle East goes on, it can start to impact the consumer, right? We've had a really strong economy relative to expectations for numerous years now. Maybe, and historically speaking, this is the sort of thing that can topple that. Maybe oil prices spiking to $100 plus and staying there for a persistent amount of time will really start to hurt. This is, by the way, when we saw 2008, I mean, I wasn't trading or investing at this time, but historically, when we saw oil prices rise in 2008, they actually rose before the crash, right? They actually were maybe a toppling factor back in 2008, right? Because guess what? It stings when your gas price goes up. Now, what happened is you had 2007, oil was on the rise. It shot all the way up into July 2008. And interestingly, it bottomed or topped before the stock market started to crash, but the pain was in. Oil prices elevated for a long time is one of the most instantaneous ways to hurt the pocket of the consumer. It only makes sense. Gas prices are the thing that can double the quickest. It's the most volatile aspect of consumer spending. So all of that to say, I know I just went on a tangent. That is all dollar bullish because the Fed is on pause. They have to be as the longer this situation goes on. That is, for gold, it's mixed. You have stagflation worries. If the jobs market falls apart, that is bullish gold. But at the same time, interest rate cuts getting priced out of the market is a headwind. It's a bearish factor for gold. Oil being high. I mean, this is oil and the dollar are moving at the hip together, right? If you think the Iranian situation is not going anywhere, you probably think dollar is going to keep going higher, because right now there is a flock to the safe haven aspect of the dollar. And so it's very interesting. You have yields screaming higher today again. Look at this. The 10-year yield is not joking around. Not joking around at all. We'll see where stocks settle out today. We are back to 64.50 here on SPX, breaking another critical level of support here. Nasdaq also, we're back below this week's lows. We're hitting weekly lows here this morning on the Nas. You've lost the 200-day moving average. And I think that if you're someone who's bullish on the market, they say there's nothing good that happens under the 200-day moving average. That's the Wall Street saying. I would say that if you can actually get a break back above the 200-day moving average, maybe we'll look constructive. Maybe if it's paired with some sort of conflict resolution in the Middle East. But this is just a hard one in the short term, in my view, to get very bullish on, because you're making a bet that, cut to the chase, you're pretty much making a bet oil prices are going to fall and that there's going to be a resolution in the Middle East. And your guess is as good as mine on that, as to what's going to happen next in the Middle East. So the market is just saying, what are the knowns? What are the knowns right now? The knowns are Middle East is an unknown. That's the only known. It's the biggest one, and it's the biggest unknown. We don't know how this stuff in the Middle East is going to go down. Until you get more clarity on a timeline for that circumstance, this market is in sell mode. We have been saying that for 2 weeks straight, 3 weeks straight. This is a seller's market until something of that nature changes, until we get some kind of resolution, some sort of guidance here. And again, we might, right? You very well might hear on Sunday or on Monday, Iran and the US have agreed to sit down, and we will postpone, we'll ceasefire in the meantime. And the market will rip so hard if that happens, right? I don't know if that's going to happen. Again, that's why it's difficult here. You could also have a ground invasion Monday. I can't tell you with any certainty what's going to happen. And so anybody who is making some huge bet right now, one way or the other, to me, it's very hard to do. If you're following price action is just straight bearish. You're hinging on the lows here. If this gets taken out, you very well could see a flood into the end of the week. So we'll see. We will see how that plays out. Moving on to gold. Again, VIX is up 9% today. Gold trying to form some kind of a bottom. I do have to say that gold yesterday was starting to teeter towards bearish on EdgeFinder, which I thought was really interesting. Now it's kind of back in neutral. Seems like crowd sentiment is the factor here. So crowd sentiment is bearish, giving a contrarian bullish signal for most assets. This signal is due to a high put call ratio, which is exactly what gold is based on. Let's go take a look at the put call for gold specifically. and we'll see what that says today. If it wants to load. Maybe it doesn't want to load. Okay, there it is. So I'm going to look at gold. There we go. Look at this. So gold's put to call ratio, once again, shot higher. Crowd sentiment, very pessimistic on gold, right? That's what that's going to tell you. This high put volume node here, I should say this line, it looks at standard deviations of put call data for specifically in this case gold. And it says, you know, right now we are seeing an abnormal level of put demand, right? So people are out there buying bearish bets on gold. So that's going to keep me from betting short side on gold today. But I'll tell you that if you get the opposite playing out, so let's say you get a little bit of a bullish sentiment shift in the next few days, right? Let's mark this up. There is more likely a chance that I'd go short on gold than long on gold in terms of an active trade. Long term, I think, you know, if you keep seeing this thing tank through the lows, then I think there's some opportunities to kind of buy and hold some gold in the portfolio. Not financial advice, just sharing my thoughts. So if I look at gold spot, if you get a little bit of a positive sentiment shift and we get a pop in the next few days, let's say that put call ratio completely reverses to the other side. Let's say that crowd sentiment suddenly gets a burst of energy on gold, and this thing on Monday shoots the opposite extreme, which could happen. We've seen some crazy shifts in sentiment. I'm just saying if this were to happen, if call volume were to go off the charts, meaning people rush to buy the call side, that sentiment shift would be a contrarian indicator, in which case I could possibly look at shorting gold. So I don't have a short setup today, but if you were to see, let's say, a pop in gold to the upside in the next 2-3 trading days, we come back up to this 50% retracement zone. Let's call it 4650. And you also coincide that with a put call ratio swinging back the other way in sentiment. That would be a possible short side continuation trade for me. Why do I like the short side? Well, I like the short side because macro still seems very dollar bullish. First and foremost, you have the 2-year yield screaming higher. Rate cuts have been thrown out the window. They're currently falling off the cliff, and there's a lake of lava at the bottom of that cliff. That's what's happening to rate cuts for 2026 right now. Now, maybe there will be a bird that swings in and catches those rate cut probabilities. That would probably look like the labor market falling apart and or oil prices collapsing back down. But for now, they're currently rate cuts are falling off of a cliff into a lake of lava. Basically, there's right now, the probabilities for rate cuts in 2026 have been destroyed. It completely shifted. And so that is a incredibly bearish situation. And it changed in the last 2 months, like drastically. That sudden change, makes the dollar, rip to the upside. Yields are ripping to the upside as well. That is why the 2-year yield is higher. That is bullish dollar. That is bearish gold. Inflation at 3.4%. This is a pre-March data point. All of this is. So we'll get the new inflation reads pretty soon for the U.S., which will indicate what happened in March, this current month. We'll get that in April. We'll get CPIs, PPIs, PCEs, et cetera. And those are worrisome, right? You have the spike in oil prices. You have disruption to supply. This does lean me a little bit more in the camp of thinking that gold has more downside as we continue to price out rate cuts. I mean, they've already been priced out. That's why I'm saying I like the idea of a bounce, right? You get a bounce in this. I like that on the short side. For now. For crowd sentiment signal, do you use only put to call ratio? I do for most things, yeah. It's my favorite indicator. It's a very, very good one in the sense that we get a huge sample size. The options market is very, very liquid. on something like GLD, right? You get a lot of options traded over there. So you get a nice idea of crowd sentiment there. When's the next EdgeFinder sale? So good question. Thanks for the reminder. It's next week, and it's very intentional. You can see right below me, you can try out the EdgeFinder for free this week. If you scan that QR code, within 30 seconds, you have the tool that I'm looking at in front of you. So if you want to try out the software, now until March 31st, EdgeFinder is completely free access. Starting in April, we will have our annual anniversary sale since we launched the product in April of 2022. So this is going to be the 4th anniversary sale of EdgeFinder since we launched it to the public. It is a huge discount opportunity. So I'm telling you that now because I know there's a lot of you guys who watch all the time and you're like, hey, I've been waiting for a deal to pick up the EdgeFinder. Here's your double whammy. This week and even into next week, scan the QR code, click the link in the description, click the link in the live stream chat, try the EdgeFinder for free. Explore it, see all the different tools within it. This gives you a chance to no strings attached, no credit card required. Again, takes like 30 seconds to pick up a copy for free for this week. And then you can purchase it in April at the lowest cost that we do all year long. Is there a way to pay over a few months instead? Yes. Yes. Actually, the best way to do that, if you're interested in setting up a payment plan, we can get you some information and set you up for that sale offer with the payment plans as well. If that is something that you're interested in, if you don't mind, James, maybe dropping the link here to our live stream or to our live chat where you can speak directly to a member of our support team. Emily or Drew from our team can set you up on a plan that meets your current budget. We have people all the time who, if you are interested in EdgeFinder, but you just need to split it up into a 3-month plan or a 2-month plan, etc., we can set that up for you. So send us a direct message. Use this link that's just been dropped in the chat to speak directly to a member of our team. Drew is the GOAT. Yes, he is. Drew's awesome. And our team does a great job taking care of people who want access to the software, but just, a lot of times we have people from places where the US dollar is very expensive. And we make arrangements to, make that more possible for people. So, again, if you've thought about it, now's your chance to try it out for free right now. No need to rush to buy it today, but try it. And next week, make your decision if you want to pick up a copy and pick it up at a steal deal. Steal deals start in April. So with that said, let's see. Stock market opens up in 2.5 minutes. So that will be interesting for those of you guys trading Nasdaq or futures, etc. Things are going to probably get volatile here in the next few minutes. We're trading on the VIX at just under 30. You've got some volatility in this market. Might be another day where I go out and do some cash secured put selling. I continue to have a beta on my overall portfolio of 0.56. What that means is I have still a good bit of cash sitting on the sidelines, and I'm positioned in a lot of different things that are lower beta or lower volatility relative to the S&P 500. Yeah. Nick, what do you think about cash secured puts on Uber? I already answered you. I told you I like that idea. I like Uber to the long side. I own some shares and yeah. So again, on this channel, we don't talk too much about stocks just because, again, it's not really a popular topic to talk individual stocks on this channel. Most people are interested in currencies, commodities, and indices over here. Check out my secondary YouTube channel where I talk more about individual stocks if that is something that you're interested in. The 20-year and the 30-year are also high. Look at this. The 30-year is back up to 5%. There is US 30-year mortgage rates. Let's take a look at mortgage rates here. Kind of interesting because, am I missing something? No, this is here. Okay. Yeah, mortgage rates continue to stay. Actually, did they come down more than I thought they did? Maybe I'm missing something. Interesting. I guess mortgage rates still high, right? Not they haven't come down a ton, but to be honest, they actually have not gone up as much as I thought they had. But regardless, one of the best ways to just get an idea, mortgage rates are back to 7%. Okay, I must have been looking at something weird. Mortgage rates are just not quitting, right? And that's one of the things that is a pain point for the current administration. Is it's why they want interest rates lower. They want the long end of the curve, especially, to be lower so that people can, you know, go out and buy homes, etc. Is your credit spreads video up yet? Not yet. No, we have a backlog of editing or videos to edit, but that is on the chopping block to be put together and put on the channel. So stay tuned on that. I know a lot of people have asked me about that, so we'll get some information on that here on the channel, the stocks channel, in the next few days. Okay, so U.S. stock market just opened up here. We'll see how this all plays out. Here's a 1 minute time frame just to see what's going on here in the 9:30 open. Stocks very red this morning. A little bit of a bounce here. We'll see if it lasts, and we'll see where things go this week. Now, again, I do want to just outline this market looks very bearish. You are losing critical support. In fact, we have to change this level here to a supply zone now. So we'll keep an eye on where everything goes. But again, for now, technicals seem to have lost, most of their strength. Look at the 200-day moving average, completely lost here on the Nasdaq, and now actually retested it here earlier this week and have fallen back through those lows. Your next critical area of support is down here on the Nasdaq, which is another, what is that, 2% drop from here. So we'll see if you get some kind of surprise announcement that is more positive between U.S. Iran. Things could start to look different. But if we close like we're closing right now, or trading right now, that is a super bearish print going into the weekend. Guys, we have our next show host taking over the stream here. It is, of course, Forex James, going to be going over technical, fundamental, and sentiment setups that he is looking at in this market right now as we go into another crazy Friday session. Hey, just a heads up, as I mentioned earlier, QR code right below my camera. Try the EdgeFinder. It is completely free. You can have access to it within 30 seconds if you scan that QR code or click the link that was dropped earlier in the live stream chat. Up next, you have Forex James taking over to take a look at some trade setups today. Stay tuned. If you are a swing trader and you are looking to get funded, then check out today's video sponsor, Ola Prime. Ola Prime has a challenge built deliberately for swing traders. Check this out. The Prime Challenge offers the ideal setup for swing traders with leverage up to 30 times. They also allow news trading. Weekend holding is also allowed. They offer up to 95% in rewards, and they have a 100% challenge fee refund available if you are able to complete the challenge. I know that a lot of people who watch these live streams tend to be more swing trader focused. So when looking for a partner to sponsor today's show, Ola Prime stood out as a perfect candidate. If you'd like to check out Ola Prime for yourself and get a live stream discount, then check this out. Simply use the promo code A1Live, that's A1Live, for 35% off any of their challenges. As always, make sure to do your own due diligence to see that this is in fact the right firm for you if you are looking to get funded. All the information will be now dropped in the live stream chat or in the description down below. Now back to the stream.
Hello. It's Friday. How's everyone doing? Hope you're all well. I hope you've all had a fantastic week so far and got some interesting plans for the weekend. James, what do you think about the efficient market hypothesis? I think it's 50-50. I don't think everything is priced into the markets in terms of, there's some people that go to the extremes and say everything is always priced in. I don't believe that. If that was the case, we wouldn't have trending markets when news develops, central banks pivot, etc., etc. But on the other sort of 50% side of that, I guess that I am very much in the belief that things do get priced in very quickly. And as retail traders, generally, we're going to be either on an even playing field or at a disadvantage when it comes to data. Disadvantage-wise is pretty minuscule. We touched on this yesterday, but essentially the only real disadvantage we have when it comes to looking at the markets, trading, getting data is more speed. It's not the actual data that we don't have. Does that make sense? So when it comes to, I know I'm taking pause. I'm trying to think of sort of a good way to explain this. But when we're talking about things like euro dollar, the Nasdaq, the S&P, these very, very liquid markets, they are the most difficult markets to trade because they are so liquid. There's so many people involved. There's so many eyes on them. There's so much research. They are very, very difficult inherently. Whereas if you went to something that was less traded, whether it be penny stocks or less liquid markets, they would generally be a little bit easier, but obviously there's downsides to that, like getting filled, more exposure to manipulation, those types of things. Anyway, don't want to get onto a rant about that. Hey James, there's a rumor of ground attack by the USA and Iran. If that's the case, do you think the market will see more reddish? Well, yeah, I mean, so if that's the case, then we could expect basically a continuation of what we've already seen. So gold lower, US dollar higher, risk assets like the S&P and the Nasdaq lower, oil higher as well, very likely. So yeah, I mean, it's an escalation. So it would just be further of what we've already seen rather than a reversal on certain assets. What setups am I looking for next week? I've got no idea. Absolutely no clue what I'm looking at next week. I normally do my week ahead analysis on Sunday, but we can have a quick look today. James, I trust this message finds you well. I would appreciate your insightful analysis regarding Euro Pound. I've seen actually a lot of institutions along on Euro Pound at the moment, which is interesting. Personally, I don't really see any reason to. So basically, the ECB has said or alluded to the fact that they're happy to hike rates if the situation requires it. It's not a case of we are going to hike rates. It's if certain criteria is met, we'll hike rates regarding oil in Iran. So there is that aspect, but then there's also the aspect that the Bank of England have taken a more hawkish pivot as well. So in my view, the way that I trade, obviously largely on central bank policy and divergences, there isn't enough of a divergence on Euro Pound to warrant me placing any positions or even being interested. So yeah, personally, nothing. I've got no bias here whatsoever. However, again, I have seen institutions largely are long. That does seem like when I say institutions largely are long, I'm talking about 3 or 4 different institutions I've seen that are in long positions. So maybe something like this, just looking for a sort of rejection of this 200 moving average and a continuation, sorry, not a rejection, a breakthrough or a break above of this 200 moving average and a continuation higher, maybe could be a bit of an entry signal, just looking to basically buy this pullback. But yeah, I don't want to talk on that too much because, as I said, I have no bias. What you're looking at, GA looks good for mean reversion. Sluggy, you are on with that one. I'm already in this position. So let's pull up the DCA template here. So let's go to the weekly. So we've discussed this one the past 2 days, but I'll go over it one final time. So what we've had on the Pound Aussie is quite interesting, actually. So earlier this year, we had I want to say disastrous dynamic. That's maybe not the right description of it, but we had a dynamic where Pound Aussie was absolutely bearish on every aspect: sentiment, fundamentals, central banks. Everything was a bearish factor for this market. So we saw obviously downside. Now the downside we saw wasn't just a regular sort of downtrend. It was a very, very aggressive move down. So if we look at this, very aggressive, very few pullbacks, which can lead to a mean reversion dynamic. So along with the technicals, obviously we've also bounced, we broke below this 200 weekly moving average, wicks to the downside. And now we're showing buying interest once we've broken back above. On top of that, if we go to the EdgeFinder and we look at the scorecard for the Pound Aussie, which I'll pull up in a second, just bear with me. We've had a complete flip in the dynamic. So not only on a central bank aspect, so obviously we had the RBA that was the most hawkish central bank, pretty much the only one that was hiking rates, and the Bank of England was actually very dovish at the time. Now, because of oil, that's not the case again. As I've already mentioned, the Bank of England has pivoted hawkish. The RBA is still hawkish, but obviously FX, when we're trading pairs, it's about relative strength, not just individual strength. So what we also see here is the Pound Aussie was reading bearish almost for the whole of 2026. Not literally, but pretty much. However, now we flipped into bullish territory. So my general rule when it comes to the EdgeFinder is I don't take trades if the score is 5 or -5. Within that sort of threshold, I don't take the trade because it's too close to neutral. However, with this market, because we've had a flip in the fundamentals, we've gone from very bearish into bullish territory, mean reversion aspect, got the central banks of, or the central bank dynamics has changed. I'm happy to take a little bit of a punt. As you can see, 0.01 lots. So, you know, I've got at the moment, what, like $20 on the line. Who cares about that? But yeah, it's more a case of building this position over time. So as it moves up or moves lower, I'm happy to just add in, build a larger position over time, and yeah, just let it go. James, why are you bullish on the pound? Well, they have high inflation. They have weak job markets. Yes. So Othamin, this isn't a what's the right word saying? This isn't a thesis on the UK long term. This is a idea based on everything I've just said. So the central bank pivot, also obviously, as you've said, with high inflation on the back of oil. So it's more of a spillover of the geopolitical landscape rather than it being a long-term fundamental expression on the pound. Does that make sense? So some of you might remember, I've been talking about this for months now. I've been bearish on the pound. I am still bearish on the pound long term. But it doesn't matter what I think long term. If the markets and the fundamentals and the data is telling me something right now, that's all I've got to work with. So that's what I'm going to trade. Yes, Sluggy, that's pretty much it. Okay, so sorry, I forgot Eurodollar. I'm still in my Eurodollar shorts. So this is the current situation. I'm not sure what time frame I'm on here. Let's actually just change this back to normal. There we go. So the H4. So yeah, I'm still short Eurodollar. Exactly, well, almost the same approach I'm taking with the pound Aussie, with very small position sizes, but adding in on those positions to build up a larger position over time. Very sort of typical DCA approach, really, or pyramiding, whatever you want to call it. So the idea behind this one is very simple. Again, although we've already spoken about the ECB taking a more hawkish stance, ready to hike rates if required. I'm still very confident the dollar can continue to outperform. I'm not seeing any signs of de-escalation other than what Trump is hopping on about. But to be honest, that doesn't seem to be very accurate according to what Iran is saying. So there's that side of things with the dollar. We've also got a lot of room on this left side that I personally do think needs to see some sort of correction. Maybe not all the way back down to these lows. Maybe that's a bit too optimistic, or maybe pessimistic, depending on your stance. Maybe just something like this. That would be fine. I don't really care. But yeah, the beauty of trading Eurodollar like this, as I've said multiple times in the past, it's a negative swap market. So if you can place these small positions, and this isn't financial advice, of course, but if you are able to get into a position or have an idea, and you're able to express it through a DCA approach rather than just having one swing position, the benefit is you can theoretically hold it for as long as it takes, because obviously the position size is small enough to handle some drawdown. But throughout all of the duration of the trade, you're getting paid swaps. So it's a really, really nice little method just to keep the portfolio moving, keep your money working, and just, yeah, it's just a nice trade to be in, really. Moving on to the last trade I'm in is Aussie New Zealand. So this one's not looking too fantastic, and to be honest, I'm probably going to cut this one today. So Aussie New Zealand isn't as strong as it was. I was looking to potentially buy, well, obviously attempting to buy on the pullback. At the time, the EdgeFinder still had a bullish reading for the Aussie New Zealand. That's not the case. Excuse me. That's not, oh, sorry, actually it is. It's just flipped into +5. It seems to be dropping between neutral and very slightly bullish. But either way, as I've already said, I don't really like to trade. I don't like to trade assets that have only got a score of 5 because it's too close to neutral. So very tempted to just scrap this trade and call it a very small loss and restart next week. But we'll see. We'll see how it goes. Thoughts on the Aussie 200? I'll be honest, I have got no thoughts on the Aussie 200. Yeah, I don't know, man. I think because I'm not yes, I trade the Australian dollar, but when it comes to stocks, I'm a little bit more out of touch. So I'm not sure exactly what's going on with the Australia's stock market specifically. But from the current global landscape, I would say lower makes more sense. I mean, we've clearly got the S&P lower, the Nasdaq lower. We've obviously got the RBA hawkish. Seems like global central banks are on hold, maybe again going hawkish or hiking. So I don't think we're really in an environment for any of the sort of equity indices markets to really do much other than either gradually go lower or just continue lower flat out. Thoughts on pound card long? I know WTI is higher at the moment and risk off risks, but curious. Okay, so pound card. Yeah, I don't know, man. So we've been speaking about pound card on and off for the past week or two, and the idea I've got right now is a little bit mixed because the Canadian dollar is obviously a massive proxy for oil. So if we get massive escalations or really anything happens regarding the supply chain for oil, obviously oil will continue higher, thus CAD will also continue higher. So it's a very risky play, in my opinion, because if you're trading oil or the Canadian dollar right now, so if let's say you were buying it obviously right now, you're then going to be holding over the weekend where Trump is known to make his moves over the weekend. Then on Monday, you have, well, obviously right now we have no idea what that headline could be. So on Monday, you're going to be like, well, it could be a fantastic trade, but it also could go straight to stop loss. So I just think there's too much risk with trading the Canadian dollar right now, unless you are very, very confident on what you already know, or you've got an idea, whatever it may be. But generally speaking, I just don't think it's worth it right now. I don't have any shorts on any indices right now. I was short on the Russell. I'm not sure what the, we'll just use futures, whatever. I was short on the Russell for a little while. I closed it though, and I can't remember exactly. I think it might have been here actually. This looks familiar. It might have been something along the, I can't remember, but it was something like this. I ended up closing it because the Russell's moving sideways. But if we take a look at the S&P, clearly moving lower. I would like to get short, but to be honest, I think I've missed my opportunity. I fumbled the bag. Some of you who watch my segments regularly might remember I was talking about shorts all the way back up here. I was short here, roughly, then got stopped at break even, kind of moved on, scrapped the idea, obviously started putting money elsewhere in the markets. And yeah, I've completely lost out on this move, which is sad, but it is what it is. So I would expect the markets to continue as they are, unless we obviously do get further developments over the weekend, specifically towards de-escalations. So I would expect the S&P to continue lower. I'd expect gold to continue lower. I'd expect the dollar to continue higher. The only thing, as I said, that would break that is if we get some sort of de-escalation. Then I think we could see the S&P start climbing higher. Gold likely would continue higher, and the dollar would give back some of its gains as well. Thoughts on EU DCHF, dovish S&B narrative versus hawkish. Yeah, so the thing is with the Australian dollar, I hate to say this, but I think you've missed the train. You're very, very late to saying the Australian, the RBA is hawkish. We've known the RBA is hawkish basically since January, and the markets have been pricing that in. So to lean on that one as your reason for buying the Australian dollar, again, I'm sorry, but I think you're way too late to it. And this actually goes back to what we first spoke about, that the efficient market hypothesis. It's like the markets have known for a while. The Australian dollar has clearly been trading on the back of that, and now we're starting to see the Australian dollar flatline a little bit as better opportunities pop up for investors. As for the dovish S&B, yeah, I mean, there is that argument. So maybe you could look at some sort of divergence, but again, I just think there's better opportunities right now. I've just seen the momentum model guide has been dropped in the chat, which is a 100% no strings attached free course made by yours truly. So it basically shows you how to find trades with the EdgeFinder, then apply it to the charts using the momentum strategy, which is very similar to the way Nick trades as well. So we're looking at key levels, we're looking for pullbacks, specifically using the fib, we're using trends, very basic stuff. So if you're either new to the EdgeFinder or you're looking for a swing strategy, make sure you check out that link. Again, it's completely free. And actually, you do get a massive EdgeFinder discount in there as well. Let's see. I think a break and retest would do on indices. That is a good point, actually. Yes, let's go back and have a look at how that could play out. Let's go to the daily. So yeah, maybe. Yeah, I quite like that idea, actually, I suppose. So it'd be something along these lines. So we've got a nice daily, what was previously support on the daily, maybe some sort of retracement back into this level and then a continuation lower. That could be quite a nice setup. But for now, for me, there is just nothing to do at the moment. Yeah, only issues of if there's escalations, it favors Swiss short term. Yes. Can you have a look at the DAX? Yeah, we can have a look at the DAX. So no reading on the EdgeFinder automatically. The theory is exactly the same as what we spoke about in the S&P and the Aussie 200. So, excuse me, as the ECB said, and we've spoken about, they're ready to hike rates if needed. We've got global central banks either on hold or hiking. We've got yields up. So overall, we're just not really in a great position for any type of positive performance from the indice equity markets. So what I would look to do is to continue just looking to short these markets. So I think, actually, to be honest, I think we may have missed this one, unfortunately. But yeah, we've already had sort of the break and retest, which is what I was going to sort of point out to you. So obviously, previous support over here. We've broken, we had a little bit of a retest over here on the, I would assume the H4, the H1, and obviously the rejection. So I think if you are looking to be a short seller, possibly back into this previous low would make sense. And then beyond that, then obviously we've still got some left side traffic over here to clear out. So yeah, there's definitely short plays to be made, but it's a case of if you're already in them, or if you're not, then yeah, what can you really do? It's a case of waiting, unfortunately. Where's the link you're talking about? It's just dropped in the chat. So if you scroll in the chat, you'll see Trader Nick and the A1 trading channels have dropped it. It's called the message says free strategy, the momentum model guide, and it's a form.jotform.com. If you click that, you can get it. So let's move on. I've got about 8 minutes left, give or take, and then we've got Alan Perez coming to take over. So dollar yen is getting a bullish reading. We've been looking at dollar yen, so we might take another look at that shortly. The US dollar is also getting a very bullish reading, which is really good to see. I like that, considering obviously I'm short euro dollar, so that's fantastic. New Zealand US dollar. I've been wanting to get into this market for a little while, and I just haven't seen or haven't had the opportunity really. So what could we do from here? I don't know. Let's see. So fib from the previous high to, let's just say, the current low. So let's say we could get short hypothetically from here, stop loss at the high or the previous high, and then take profit. Actually looks quite attractive down at this previous low over here. So again, as I always say, these very aggressive impulsive candles generally will see a correction at some point. Not always. It's not 100%, but generally speaking, we do see these types of candles get some sort of correction. So I think some sort of take profit within this level is very, very good. Actually, I think that's very sort of the best place for it. So I think actually this is solid. I think this is exactly what I would go for if obviously we can get this pullback. If not, then there's nothing for me, but there you go. NZD USD has been my best setup this year. Yeah, my best trade this year has been pound Aussie, but yeah, since then I've really not had much going on. I'm trying to think if there's anything really. I don't think I've really had anything this year that's been noteworthy, other than again pound Aussie. But there you go. So yeah, let's take a quick look at dollar yen as well, because we have been discussing sort of interventions. I'm not going to go into the intervention aspect today. I think we've spoken about that enough already this week. So it seems like dollar yen is on a very, very fast track actually to getting back to its previous all-time high now. So let's just say 161.5 incoming pretty quick. Beyond that, I would expect dollar yen to start heading towards 163 to 165. Then we get the intervention. when it comes to actually getting a trade, though, that's going to be the sort of tricky part. So I think really what the best idea is same as always, just follow the trend, wait for the pullback, and look to go long. So if we could see a pullback into our fib from here, which obviously from the previous low to the current high, I'd quite happily take a long position into, let's say, 162.5 as a round number. I think that's quite a nice area to look for. And that could provide, if this goes perfectly, hypothetically, this would be a nice 1 to 4. But the way that dollar yen's market behavior is, I would highly doubt that this setup is actually going to come, because it seems to go through these phases where it's very aggressively trending. If it's not doing that, then it's very aggressively, whatever you want to call this, chop or whatever. You know what I mean? So it can be a little bit tricky to trade dollar yen, in my opinion, for the way I trade anyway. It's not really the most ideal market. You're looking for the same entry on New Zealand US dollar. That's good to hear, Sluggy. It's always nice when I'm talking about something, you seem to pop up quite often saying you're already in it or you're looking at it, which is nice. So congrats. James, my boy, I seen you've been posting a bunch on YouTube. Yeah, thanks, Josh. Yeah, I'm trying to post 2 to 3 times a week these days. A variety of more beginner-friendly technical stuff and also sort of macro stuff as well, like what I posted this morning. But yeah, so I'm just trying to think if there's anything I haven't covered. I don't think there is, to be honest. My trading right now is very flat. The positions I am in are very, very small, and there's not really anything that I'm looking to get into. Or, well, there's things I'd like to get into, but there's nothing I really can do at the moment just due to current price levels. So yeah, I'm taking it easy at the moment. So we're still seeing the same regime, if you will, or the same theme, with the sterling obviously getting bullish readings. So we've got pound Aussie, pound CAD, pound yen, pound New Zealand, and pound Swiss all getting bullish readings. Same thing goes for the dollar, with dollar Swiss, dollar CAD, dollar yen, and the US dollar individually. And of course, euro dollar and New Zealand dollar getting short readings. Oh, and pound dollar. Actually, I've just seen pound dollars popped on. So let's take a look at that market. So I think realistically, the easiest direction for pound dollar is lower. And that's more driven by the US dollar, not necessarily driven by the pound. However, I wouldn't want to go short pound dollar. First of all, because I'm already short on euro dollar. But second of all, because I think the relative strength between the pound and between the dollar isn't as great as what it is between the euro and the US dollar right now. Just my perspective. But yeah, it doesn't mean I wouldn't want to go short pound dollar, but I just think if you have the opportunity or you have the choice between the two, euro dollar is my preferred one. We'll see DXY at 101. Let's see. It does seem like that, actually. Let's zoom out to the weekly. Yeah, I mean, the dollar seems to be ready to break. It's not break, sorry, that's not the right word. Breakout is what I was trying to say there. So, hold on, let me just draw this trend line as accurately as I can, something like this. So this is something I've been speaking about. I've been talking about this for probably a few months at this point, but how many times have you seen people make bear calls, so bearish ideas, the dollar's doomed, the dollar's going to crash, whatever. How many times do you think this happened every time the dollar's come down to this level? Everyone likes to be a doomer right at the bottom. It's like the euphoria thing. It's like when the markets are rallying and everyone's getting euphoric, that's when the market reverses. It's kind of the same thing. When everyone's getting pessimistic and everyone's turning into a doomer, the market starts to reverse. Now, I'm not saying obviously that's not actually why the dollar's reversed, but it's just the way it works. It's interesting. But my point is that I'm making here is every time we've come down to this level, everyone's a doomer, and then we start a bullish cycle. Every time, a bullish cycle. So now my question is the situation with the US and Iran and the central bank policy, or the more hawkish stance from the Fed, enough for the dollar to start a new rally? I think it might be. I think it might be enough to at least be the fuel for it to continue higher. We'll see. But yeah, I think short term, 101, 102 seems absolutely realistic. No, that actually wasn't a shot at ball out at all. That was a general thing. I actually saw it more on YouTube about people. Oh, the dollar's going down to 90 or 80 or whatever. It could, of course, it could, but I just don't see that as very probable. Wait, I don't see that as a very high probability situation right now. Black Friday, if we have nothing. What do you mean? Do you mean in terms of buying stocks or what, Max? Be short euro dollar for the past 3 days. Josh, that's fantastic to hear. Market's kind of slow, might just resort to poly market. Yeah, might be the best option. Seen some crazy things on poly market. Crazy place. I've never done anything on there, but I've been very tempted a few times. Oh, you might. Oh, okay, right. Okay, I see what you're saying. S&P 500. Yeah, we did take a quick look at the S&P 500, but I don't really think there's anything to do. I mean, the difficulty is, I mean, it's clearly a bearish market. Everything for the S&P right now is bearish. Got a hawkish Fed. I'm not 100% sure about earnings and the individual stocks. I won't go into that because it's not my area of expertise, but risk off sentiment, yields up. There is just nothing really there to support it. And technically speaking, there is a lot of room on this left side that could do with a bit of a correction. So I would like to go short, but the problem that I'm facing is how do I actually get into this market? And yes, maybe in hindsight, there has been actually some entries which I haven't clocked onto, to be honest. So maybe the next opportunity is wherever the next low is printed, just look for the fib. Look for the fib pullback and then look to go short. That might be just the easiest approach. Oh, look at the market heat map pre-open looks terrible, does it, Max? Interesting. Yeah, I mean, it's not a huge surprise, to be honest, but the beautiful thing is about having two sort of, you've got your active trading and maybe you have your sort of investment portfolio. These are the times where it's fantastic to start buying things on discounts. And I'm not saying right now, today, start buying. It's not financial advice. It's not what I'm telling you to do. But these types of opportunities or these types of situations are when money is made for the long term. Of course, I'm not saying by tomorrow, but if you look at sort of the tariff crash, COVID, all these times where the S&P is just, quote unquote crashed, just buying is sort of the sensible idea. Buying the dip for long-term gains is fantastic. Again, not financial advice. There's a bet running right now about if the US will confirm alien life or not. Well, it depends on the timeline. I would expect not anytime soon. Anyway, sorry, I've just realized I'm way over my time slot. I'm sorry, Alan, if you're sat in the back waiting for me. I didn't realize. Anyway, ladies and gentlemen, I need to head off. You've got Alan Perez coming to take over the show. Don't go anywhere. Alan is fantastic. Guys, have a good rest of your day. Stay safe. Don't get margin called and enjoy your weekends.
If you're enjoying the stream right now and would like to join us beyond just live streams, consider joining our free-to-join Telegram channel. Inside of our Telegram channel, we're sharing daily market analysis, bonus clips from the live streams and videos, giveaways to our products, prop firms, and brokerages, and much, much more. So like I said, if you're looking to stay up to date with ideas that we're looking at in markets, even if you can't make it to a live stream, consider joining our Telegram channel down below in the description of this live stream or being dropped in the live stream chat as we speak. Just click that link, it'll navigate you over to Telegram, click join, and you can come back to the stream. It's totally free to join, and if it's easier for you, you can also just use the QR code that you see on the screen right now. Now back to the live stream.
Good morning, everyone. I hope you guys are having a happy Friday here. The weeks have been flying by here recently just because there's so much stuff going on here. And James, no worries. You actually, you talked about the heat map here, and I was like in the background and I looked it up and I'm seeing here in the chat, but like, look at that open here on the equity side. This is a heat map for the stock market for the S&P. And if you go to the Nasdaq, it is similar there. You have yields just spiking higher. US 10-year yield, 2 years, a little bit soft here today, but lots of volatility. And look at that from a price action perspective. This is something I talked about yesterday. In fact, I was like, this is going to be very scary. If you do see From a technical perspective, if you see the S&P 500 take out these recent lows there, recently in the past, you have seen some very strong characteristics of bearish, structure, bearish trend. And now you are starting to see, essentially, let's see if this epic pendulum here works here. But you're starting to see, yeah, awesome. You're starting to see that we are below that 200-day moving average here. There's a potential that if this thing continues lower, then you do get a moving average crossover. That's not good. And so the next level of support where I think it lies at will probably be that 6,200 handle. If you just kind of look left here and move this zone all the way to the left, you can see that this is where previous support was, somewhere like this. But yeah, not pretty at all. Not pretty at all. So S&P is doing that. Nasdaq seems to be leading the way there as far as relative weakness goes. 22,000 is that next level of support there. And I was looking at this in the background too. CME Fed Watch tool probabilities. The next rate cut that markets are expecting is December of 2027. Like, you were seeing 2 rate cuts on the table for 2026, and then you had no rate cuts on 2026, and then now it's like December. Like, that's the end of the next year. So not good at all. These rate cut probabilities are just getting slashed and slashed and slashed as the day goes on. And I'm curious to see how market sentiment develops. I didn't go over this, but I wanted to see this today just for my own reasoning here. Let's go to sentiment and let's go to put to call ratio. I want to see what options market's doing today. Let's see. So the S&P 500, okay. Let's look at the Nasdaq. Let's look at the US dollar. Okay. Nasdaq, high call volume. In fact, if you start to see for the Nasdaq, and if you start to see this across the other equity indexes as well, but if you start to see like some people trying to aggressively buy the dip in a falling market, if you see this basically this line here, way below this blue level here, this high call volume, that could suggest that we have a lot more room to the downside to go. Let's look at the do we have Dow Jones on here? Yeah, we do. Dow Jones. Okay, Dow Jones is in the middle there. Russell in the middle too. Okay. Gold, high put volume. Okay. This is a very extreme reading here to the put side. So maybe you do see some kind of a bottoming formation in gold if things start to flip. Okay, but none of that. Let's go ahead and talk about my trading, how I'm navigating the markets, what I plan to do, because that's what you guys are here for, right? So good morning, good afternoon, everyone, wherever you are in the world. Like always, if you guys have some charts that you want me to go over, feel free to drop that in the chat. I will be more than happy to go over that and give you my honest thoughts and opinions on how you can, approach it, navigate it, whatever the case may be. And like always, this is not financial advice. So with my current positionings, I had euro dollar short, Kiwi dollar short, and Kiwi yen short. I actually went ahead and liquidated all of those positions for a net profit, a very small net profit. But I went ahead and did that because I didn't want to be positioned in the weekend. Now, usually I don't mind that, but just because my entry price was pretty much where price is right now, so I was very barely in the profit there. So with the weekend, lots of things tend to happen over the weekend. And so there was a possibility that you can get a gap up or down, depending on how things go. And because I was in break even, basically, I didn't want to put myself at that risk. So I basically liquidated the position for a very small profit. And I'm looking to go ahead and re-enter the market next week, right? Depending on what happens over the weekend. If you get an escalation or de-escalation, I'll go over, what I'll plan to do in either scenario. But essentially, my current positioning was short the euro dollar and short the Kiwi. So we'll start with the Kiwi here. Lots of stuff on my chart, and I'm going to go ahead and clear it out here and go over it with you guys. So Kiwi dollar, for the most part, bearish, right? We can agree with that. You see that a lot of it is because of the dollar strength, the safe haven, but then also the Kiwi in general. Their economy is not doing too hot. So I really like this trade. In fact, I do think that if this level starts to hold here, there's a possibility that we, target this 5,500, 0.55500 or 0.5600, somewhere around there. So I'm actually looking for if there is any pullback opportunities within the Kiwi, as long as you still have the war going on, then I like to short it. I think that's a good trade. The technical aspect looks good. If you go to the top setups page here and you look at the US dollar, you can see here that Kiwi dollar is at the very bottom, getting a very bearish reading there. So I like to see that. So as long as that's intact, I would love to go ahead and participate with that. Euro dollar, same concept as well from a technical perspective. It is starting to show some bearish characteristics. I had these two zones here marked up. Actually, I'm going to go back to the daily time frame on that. This level here, this 1.1400 level, is a level of support that we bounced off of here. And then this was a level of resistance, this 1.1600 level. You can see that we traded below into it. We pulled back into it, and it looked to be holding as resistance. And now we're trading below it. And I had this little trend line here on a very shorter time frame, 4-hour time frame here that we were kind of in. So as long as we can stay under something like this, I would like to enter the market again. Right now, if it was a Monday, I would take the trade. But because it's Friday and you have the overnight risk or the weekend risk, I don't want to trade it because you have an opportunity of it going up or down. So as long as price can stay here and next week opens up fine and you still see a chance of the war continuing, then the trade is fair game. I'll go ahead and enter the trade. But if not, I'll go ahead and do advice another way, right? But essentially, I like those two pairs. There's a lot of pairs with the dollar that you can trade. You can trade Aussie, Euro, Pound, Kiwi, dollar yen, dollar Swiss, dollar CAD, all of that good stuff. Me personally, when you're trading dollar strength, the best ones I would go for is Euro dollar short and Kiwi dollar short. Every other one is not the best. So those are the two that I'm going to keep my eye on. Now, let's say you do get a de-escalation, a ceasefire, some kind of agreement. I don't know. Then I would like to go ahead and still fade these currencies on a pop. So most likely than not, you will see the dollar taper off here. Maybe it trades into this, support this 99.500 level or 99.6, or we find our way all the way down into the 98.400 right here. This 200-day moving average, 50-day moving average possibility. If you do get that, I am still looking to ultimately, when the time is right, when the technicals present themselves, to go ahead and short Euro dollar, short Kiwi dollar. Why? Their growth is just not the best. So if you go to, for example, let's go to the macro surprise index here. You can see here that the Euro dollar is doing a little bit worse than the dollar. And then Kiwi is actually doing really, really bad here. The second to last place. So Kiwi dollar is not good there. They've been struggling with growth, and then now you have this idea where you add inflation on top of that. That is not a good look. That just makes it really, really hard for the everyday people in those economies to really navigate. So I like those to the downside. The macro lines up, and so I'll just be waiting for a pullback. So let's say you get a de-escalation, dollar falls, and you get a pop in these assets. So what levels am I looking at to short the market? Well, I'm gonna actually delete all of this to give you guys a clean slate to work off of here. For the most part, I like this level here where my eye takes me somewhere within here. Doesn't have to be perfect, but somewhere right here. I also do like the fact that the 200-day moving average is right there as well in the area. So if I can get a possibility to short here, and then what it would look like from a risk to reward perspective, let's just say we enter somewhere here, right? I will look to target this 1.1400 level, and my stops will be right above here of that 50-day moving average. So I think that's a 2-to-1 risk to reward, pretty good. Let's say it keeps going higher. Then potentially the next level that I would like to target would be something like this. And actually my stop loss will be a little bit more tighter. So somewhere around here. So 1.1800 essentially is where I'm looking to enter short if we get a bigger pop in the euro than what we expect. And then as far as target goes, I would probably move my target all the way up into right here where that 200-day moving average is. Why? Because let's think about it. If you start to see a pop up here, you're now back into that 200-day moving average area. You're right above it here. So then the possibility that the price action starts to look like this. Let's see, Epic Pen. Okay, let's say you get the euro price action all the way, somehow it pops all the way over here. Well, then you have the possibility that if it trades back into here, you have buyers stepping in on that 200-day moving average, that 50-day moving average, and it continues higher. So you want to be mindful of the counterparty that you're trading, the buyers in this market. So if you get a pop all the way up to here, I'll still take the short trade. However, my target will be somewhere within here. That's my case scenario for euro dollar. For Kiwi dollar, very similar as well. I would like to trade it up into this 200-day moving average and short it again. And if it doesn't hold, if it breaks above it, then I will short probably at this 6100 level. In fact, let me go and put a fib on this. So the fib from the high all the way to the low, somewhere within here would be a good level where I would short. Basically anything here. I know this chart's starting to look a little bit crowded, but Somewhere within here is where I would short Kiwi dollar, or even all the way over here if I'm aggressive with it. But I actually like this 38.2. This area here where these moving averages are laying at, this is where I would short it. And as far as from risk management goes, let's say I take the aggressive approach and do 38.2, I would probably do something like this. This is the only way I would play Kiwi dollar. In fact, I wouldn't do it like I would the euro dollar, where I'm looking to catch it all the way up there, because that's a good distance up. So I like the Kiwi dollar like this. That's how I would approach it. Okay, let's see at the comment section here. What are your thoughts on pound Aussie? Actually, it's a little bit, I wouldn't give you the best take on it, because Aussie dollar has actually started to weaken a little bit there. Pound and Aussie. So you see, before Aussie was very strong and pound was very weak. Now you're starting to see that relationship flip there. What's up, Marco?
I'm sorry, I got sidetracked with something I was reading.
No worries, no worries. I'm gonna answer this question here without using Edge. Elvis said, without using EdgeFinder, what makes you say the Kiwi is weak right now? Well, if I didn't have an EdgeFinder, I would just look at the price action. The price action will tell me. But the real answer, Elvis, is that I use the EdgeFinder and I can't ignore it, man. The EdgeFinder will tell me from a fundamental perspective why it is weak. And you know, if you're trade like me personally, I would not tackle the currency market from a swing trading approach without fundamentals. So I can't really answer that question. I would have to revert to the EdgeFinder to tell me why it's weak, and the fundamentals point that it's weak. And so he said, look at the prices.
So how are you doing, Alan? What's on the watch list for today?
The watch list, I actually liquidated my positions because of the weekend.
Okay.
And there was some back and forth communication between the two parties, and I don't know how it's gonna go. And the reason why I liquidated was because I liquidated for a very small profit, and my prices were basically break even. And so you have the gap risk up or down. I didn't want to go into the weekend with that, but I was basically going over what my approach would be. Moving forward, if you get a de-escalation, escalation, or if nothing happens. And I actually like this part. Like, for example, euro dollar is a short trade that I like to trade with this war going on or without it. The only difference is that, without the war, you probably get a pop in the euro, but then it's just a matter of finding when the entry would be. But like right now, you do have some clean bearish structure on the euro dollar. So my positioning is the same. I just, the weekend, I don't want to hold on to it just because I was break even.
Cool. What about USD JPY? It's now super close to the possible intervention level. Let me just bring it up. So if I go to UJ, it has hit 160. It's pretty much at the crucial level. So what's your take on that? Will you be looking to enter a short? As far as I read, basically the BOJ could be more focused on the war right now. So they could be looking at the consequences of the war and maybe being afraid, like if we intervene at the moment, so they do an intervention now, they crash the price, but then oil prices explode higher, pushing, of course, the dollar higher as well. The intervention could be all in vain, and they could spend a lot of money all in vain. So as far as I got, like, they may not be super happy to intervene, but they should still defend the level of 160 and 161 and 162 if you get super fast appreciation. So if you get just like a straight shot to the upside, they should crush that back into some lower levels.
Yeah, it's a tricky one. I think I'm just going to exercise discretion on this one and not short it at the moment. The conflict is still ongoing. If you go to the top status page, it's getting a very bullish reading. Last time I checked, 10 score there. So I don't want to, trade into that. To your point, we've discussed this too, like, intervening into dollar strength is probably not the best case use. It'll probably make it meaningless. I do think that maybe if you get a a ceasefire of some sort or the end of the conflict, then it will make sense for the Bank of Japan to go ahead and intervene, because you have the chance that the safe haven pricing of the dollar gets priced out a little bit. That'll weaken the dollar, and then the yen can go ahead and appreciate there on top of what could be a potential intervention. Ivan says he has a question here in the chat, so let's go ahead and answer that. Ivan, feel free to drop that one in there. And then G Drum says, wishes to everyone. Do you have any insights regarding dollar Swiss, which is a interesting pair to me, because you do have the Swiss that is known to be a safe haven as well. What are your thoughts on that, Marco?
So USD CHF, I was in a Euro Swiss buy position, which I closed. So let me bring that up. Euro Swiss. Let me just see which one was that. Yeah.
No, Ivan's funny.
Yeah, I saw his message. It's pretty funny. And Ivan, the answer is skincare. Just putting some lotion on each night, and that's about it. But jokes aside, Euro Swiss had a position on. I don't think this is gonna go up a lot more. Looking at USD CHF, I mean, to be honest, as far as the Swiss goes, I'm completely uninterested if we stay at these levels. My personal game plan is, if we go back to 0.9 on Euro Swiss, then it's game on for the Swiss franc, for the SMB to come in and intervene, maybe. So to essentially defend that level. But right now, as it stands, we are no longer close to 0.9. So the SMB is not going to be interested. Swiss franc is not acting like a safe haven. That usually happens, from my understanding, that usually happens when yields go up, which we have the US 10-year just exploding higher. So regular safe havens don't work. Like gold sold off, yen sold off, Swiss franc sold off. That's kind of my main reason why I'm staying patient at the moment. But I have alerts set at 0.9 or near that level, and I'll be looking to buy back in.
Yeah, this is a very yield-driven environment, and this is actually how I'm going to tie it in to answer Ivan's question, because it's a fantastic question. I think we got into it yesterday, but like he said, what do you see the most important driver outside the war? When it comes to dollar Swiss, the reason why I think that it may not be reacting the way we're doing is because the war environment that we're navigating is very yield-driven. So with the Swiss franc being a super low yielding currency, right, you have the appetite to go for the dollar instead. And I think the main driver would be outside the war. I trade currencies, so my kind of answer will be kind of driven towards this. But like, certain economies like the U.S. is a little bit more resilient, so the inflation impact may not be as significant as it would be something like the euro or the UK, where they're struggling with growth, right? So when you add high inflation prospects onto a country that has slower growth, if you get too much of that, you can lead into that stagflation spiral, versus something like the US being a little bit more resilient. It can be seen as a positive, right? Higher interest rate, higher yielding currency, whatever the case may be, then you add that safe haven status. I think that whenever this war goes away and you start trading back to other fundamental reasons, I think the main driver would be what central banks are doing and how fast are they looking to flip. Because I've seen headlines where you see the Eurozone or New Zealand where they're like, you know what, we're just going to let this pass through. They're being a little bit more passive about it, a little bit more laxed, versus some other economies are much more aggressive. For example, the US has flipped entirely from 2 cuts to a possible hike, or the Aussie dollar, where they're in an interesting spot too, because they already had this pre-existing elevated inflation, where now they're starting from a vantage point that's much higher when you're talking about inflation, versus something like the Eurozone, where they were already at neutral, right? They're just trying to maintain that, versus the Aussie dollar is trying to fix a whole different problem. So the way I would approach currency trading and all this other stuff is, once this war is behind us, is what's going to be the stance on central banks? Are they going to be aggressive or neutral or a lot more patient on rate cutting? Like, for example, the dollar, right? You have this pre-existing motive from the president to go ahead and lower interest rates really aggressive. So much so that he's took in a very intentional approach or intentional pick on the next Fed chairman. What's Schwartz going to do when he comes in, right? Is he going to be aggressive with that? You know, he was a previous inflation hawk, so I don't know. That's kind of how I'm going to approach it. Is interest rates driven and all that good stuff. And the question I would ask Ivan too, is when are you going to come back on the live stream, man? Because look at the Nasdaq. Like, you're starting to see yields really pressure everything. If this goes on for too long, you're going to start to see a lot of pain in the equities market. Like, one thing I had on my mind yesterday was, if you take out these recent lows on equities, like at Nasdaq, S&P, then you start to see a real risk of the downside. 22,000 on the Nasdaq, 6,100, 6,200 on the S&P. You're below these moving average that hold a lot of weight, the 200-day. That is like, you know, to me, this is driven by yields. This is all driven by yields.
I would actually say that this is also driven by just disappointment around Trump's comments. I mean, markets react to what Trump says. We've seen it for the last year and a half. And again, the market has started to learn that what he says doesn't have a lot of weight to it. So usually the effect we have from the start of the war, I think I talked about it yesterday a little bit. Essentially, the effect we have is Trump is dovish on Mondays, and as the week goes on, he gets more and more hawkish, or the markets get more and more hawkish. That's why you have essentially, look at this, Monday 23rd rally, Monday 9th rally. Let's find the Monday before that. Monday the 2nd, there was a rally higher. So essentially dovish Mondays, and then the markets kind of start losing faith and they start selling off. So this is just one more cycle, and the cycles are getting more and more aggressive. I mean, look at the initial cycle from the start of the war, the 2nd of March. It was a small one, but as we go on, as the war drags on, the cycles keep getting bigger and bigger. And of course, we just broke a key level of support right there, which is not really the greatest sign. The way to trade it would be to essentially, well, I wouldn't really buy the S&P at this moment, but maybe selling it on Monday highs or Tuesday highs, and then fading it into the rest of the week. That could be a pretty smart play. Again, your sample size is pretty small. The sample size is 3 Mondays from the start of the war. 1, 2, 3. But so far, it seems to be working pretty well. I've thought about it, and I'm not sure what else Trump can come up with in terms of statements. Like, what can he say that's going to drastically move the markets anymore, except a full-on escalation?
Right, so, which is the opposite direction that he wants to go, or that the markets would like to go. I don't remember off the top of my head, so forgive me, but I believe that yesterday, right before the close, there was a comment from him. I think it was that, I don't know. There was a comment that was supposed to save the market. And it did not move at all. In fact, it just kept going in that direction. So you have a real point as far as like the boy who cried wolf, where you keep saying this thing and the action behind it doesn't show. The markets are just going to ignore it, and we saw that yesterday. Would you be willing to pick up the market at something like 22,000, or are you just going to wait for like a V-shaped recovery?
Well, Brent. I just read Brent's new daily newsletter, and he thinks we're starting to get oversold on the NAS and on the S&P. So he's actually short. He made some decent profit, but he's starting to take profit and starting to possibly pivot soon, or at least be neutral. So I think his first target is 23.5, which we have hit. So his first target was reached, and he mentioned in the today's piece that he's starting to become more neutral on stocks. So possibly picking up some stocks near these levels could be a good play. As far as my personal decision, I'm just going to wait for actions. So words don't matter, actions matter. Actions should move the markets long term. So I'm waiting for something to come, not from the US side, but actually from Iran. Some clear statement, some clear actions, preferably a complete reopening of the strait, which is then going to flip me into risk on. And my first play is actually going to be the Nikkei.
Yeah.
The Nikkei is going to be my favorite. And, the more it sells off, the better price I can get. So I'm not even mad, because I think the Nikkei is still the greatest indice play in 2026. So catching some discounts on the Nikkei back to all-time highs, I think that's pretty good.
I'm gonna be very, as far as like my trades moving forward. By the way, I don't. I'm taking this from the stance where I think that we could be coming to an end, because, and the only reason why I say that is because you're having open communication from both sides.
Okay.
Ziv, you said from Trump. I think it was from both. So I think Trump said that something could happen, and then Iran said something else. So that's why I was a little bit confused there. But my approach to trading moving forward here, unless you see a clear escalation on the weekend, where there's it's really hard to backpedal that, like military action wise, then I'll change it. But for now, at least, I'm just gonna shorten my time horizon on my trades here. Maybe I'll transition into intraday and just play relative strength. That's gonna be my approach, because I'm assuming that you're having some open communications. Maybe there's some pain points on both sides that's strong enough to allow a ceasefire or something like that. So I'm just gonna take that safe approach. Like we're a couple weeks into the war now. Prices are moving. Prices are getting very euphoric. I'm thinking, like, I remember the April 2nd sell-off in the stock market with the tariff stuff when he did it. Yeah. And then you had the options market saying like that you had like this crazy put demand to where, like, for you to be profitable on it, the stock market had to drop like 20% in one day, which is an extreme move, right?
Yeah.
So I'm kind of like thinking, like, maybe are we approaching an environment like that where people are really, really having these overly bearish expectations to where you can catch a flip like that, or where you're getting towards the end of something like that. So I'm going to be looking at the put to call ratio. Say it again. Sorry.
I would actually say that people are still, or at least up until this week, they were not prepared to sell. I think the stock market has been holding on too well, if I'm being honest. For what happened? I think most people were focused on buying the dip and like euphoric about the de-escalation and the move to all-time highs, rather than protecting their capital and possibly selling off some size. So personally, I think we're just starting to reprice the stock market to some more fair levels. I think it has been holding up too well. Yeah.
Oh, that's fair. That's fair. My only concern is, like, I don't want to hold a swing trade and have an expectation where this thing can play out for 1 to 3 weeks, when you're having what could be, again, I don't know, but what could be progressive talks. And then, if I hold that expectation for 1 to 3 weeks and something happens in 2 days, I just get absolutely killed. So I'm just going to be like very, short size, short time horizon, and just take that approach, unless you see like a complete escalation in what's going on. Like, missiles are firing, like, the troops, you got a couple thousand Marines over there, things like that. That's just going to be my approach.
Like boots on the ground.
Yeah.
One thing is for certain, DXY is going to go to 95. I think that's definitely going to happen.
Eventually, it could be 50 years from now. It can be next week. We don't know, but it'll be, yeah.
If the viewers don't know, we have a certain member in the A1 Discord who forecasted the DXY move to 95. It almost happened.
95.5.
Yeah, very close. So yeah, I think Ballout is going to be calling for DXY to 95, like, for the next 50 years, probably.
In the next 95 years, it'll happen.
Probably, yeah. So he'll be right eventually. And what about the last thing I wanted to talk about is gold. Gold actually seems to be holding on okay for today. So it's positive. It's not following stocks anymore. It's not following, pretty much the dollar going up, because if I take a look at the S&P, no notifications, thank you. If I take a look at the S&P, it's just a bloodbath at the moment. If I take a look at the DXY, it's bullish, but gold is starting to hold. Bounced off of the 200 EMA. Looks pretty good. Do you have any take on this? Personally, I don't. I'm not sure what's happening, but maybe you know something.
Yeah, so this is essentially what I was kind of getting at here with the stock market as far as getting to euphoric one-sided. I don't know, because you still have higher yields, so maybe this sentiment gets crushed, within a day or two. But I'm gonna put the screen here to mine. There you go. The put volume or the options market is very one-sided on gold as far as directional bias. You have insane put volume here, getting higher than what it once was. Like, look at this right here. This is very extreme there, to where you need a very specific move for if you're trading like 0 TTE options on GLD or something like that. You need a very strong move to be profitable. I'm sure the premiums are sky high on that market. So you're seeing that like very one-sided euphoric options flow there. So I think that maybe that's what's kind of supporting gold there. Again, maybe there's a possibility that this thing ends over the weekend and yields drop and gold lives on, right? You have that 200-day moving average acting as support for now. It seems to be holding up there. So to me, that's gonna be my floor until something changes. But yeah, I think things can go either way. That's why I flattened up, because you have the possibility of a de-escalation. But to your point, Marco, something that we've talked about is maybe Trump is just buying time, because it takes time for all those troops to get over there, stationed up, ready to go, and this is just Trump doing that, right? So I don't know.
Yep. I mean, as far as I can see, for Iran, it's actually beneficial to keep things going as they are, because I think they are still selling oil to China and India. So essentially, they're selling oil for more, so they're making more money, and they're keeping the strait closed, which is putting immense pressure on Trump. So they may think, look, if we hold it for the next 1, 2, 3 months, we may get a better deal down the line, rather than just negotiating at the moment. So it's super tough. I mean, I'm not a political expert. I'm just a guy on the internet, so don't listen to me. But from the experts I'm reading, they're saying it's going to continue for more, unfortunately.
I'm in the same camp as you. I'm just another guy. Before I leave off here, because I know you're a portion of the segment, but
yeah, sure, no worries.
Guys, EdgeFinder is completely free right now. Get yourself a copy. Join the Telegram channel, and explore it over the weekend. Do some homework. See how it goes. Back test it. Do the you can look at the score history and all that good stuff. And this thing will save you from taking unnecessary losses. I love this thing, the EdgeFinder. And I hope that you guys buy it next week, because it's a good tool and it'll pay for itself over and over and over again. So go ahead and do that and join the Telegram channel, and stick around for Marco's segment, because do you have a DNA funded challenge here today as well?
Yep.
Awesome. Sure. All right, man. Well, we'll talk next week. Hopefully we get some action and some more clarity.
I'm looking forward to the next week, and have a great weekend.
All right, man. You too. Bye-bye.
Yep. See you. Goodbye. Let me post the link to the giveaway. So if you guys want to participate in the DNA funded giveaway, check out the link I posted in the comment section. Fill it out and you'll get entered into the giveaway. So it's a 10K one-phase account. And if you want to get an account, if you want to get a challenge, we also have a 25% discount code for you. The code is A1Live. So it gets you 25% off any DNA funded challenge. Okay, check it out. By the way, this is my personal account. So I have essentially one trade running at the moment. This is a 25K phase 2. If past the phase 1, now phase 2. Profit target, I'm actually pretty close to the profit target. So profit target is 1,250 and my profit is 826. So getting close, looking forward to passing, or maybe I blow it. Stay tuned for any updates. But I think it's gonna be fine. So I've had a great experience so far. This is a great prop firm. There's a big broker behind them. Our traders at Day One have been getting The traders and the members of A1 have been getting consistent payouts. I know Max just had a payout, I believe, if I saw that correctly. So take a look. And code A1 Live gets you 25% off. As far as any updates on my positions, I have a buy setup on oil, which I almost got taken out of. This was a signal in the A1 Discord, by the way. So we have now almost fully retraced the comments from Monday. Comments on Monday were pretty optimistic. Markets loved it. And now we have started to retrace the full move higher as the markets have noticed that Trump was probably lying or just completely exaggerating. Someone was lying. Either it was Trump or it was Iran. Okay? Someone was lying. I have to be careful what I say because I do want to visit the US in the future and I don't want to get my visa denied. So I'm not sure if I can say anything bad about Trump. But he's a tough guy. USD JPY is just around break even. We are approaching the intervention zone at 160. Okay, or we have already hit 160. Question is now, will the Bank of Japan be happy to do an actual intervention with a war looming in the background? Because, as I mentioned during our joint segment, if the BOJ comes in, does an intervention, let's say this happens, boom, and then you get an escalation in the war, the dollar gains value, and we quickly move back to previous levels with the Bank of Japan wasting a lot of money for an intervention. So that would be a case for no intervention. I do have a position in. I think an intervention is highly likely, and I'm glad to be positioned for it. This is also acting as a bit of a hedge for my euro-dollar short. Okay, my euro-dollar short, because if we get an escalation, EU falls, while UJ goes higher, but the level should get defended, so there's actually a chance we get this. Okay, that's why I'm sort of also using USD JPY as a hedge. Free positions. I do have the Nikkei on my watch list. This is for when the markets flip to risk on. So if we get a concrete resolution, if we get actual words and not just talk and yap, then I'll go in and buy the Nikkei. I think it's the best buy at the moment, or it would be the best buy once we flip to actual risk on. You have a dovish prime minister, you have a dovish government, you have capital coming back into Japan, you're getting higher interest rates in Japan, which is destroying the carry trade. The capital from the carry trade is going back into Japan, possibly flowing into the Nikkei. I think we can pretty easily go back to all-time highs. Right. So if we do get a de-escalation, and if I manage to buy, I think we could very, very easily flow back or fly back to all-time highs. I want to post the link to the form once again. So let's paste it. Let's see. Okay, I think it went through. So if you want to participate in the DNA funded giveaway, just check out the link in the comments, fill out the form, and you'll get entered into a giveaway. Let me see if Tiger is coming on after me or if I'm the last one. Let's just check. Okay, we do have Tiger coming on. No worries. I'll try to speed up a little bit. Comments time. Comments time. So it's not letting me in. 1 email per month. If you want, you can use the second email, but the form resets once per month. Max says yes, some issues still, but they pay when they are in line with your trading. Okay, so I think you got a payout recently, so big congrats on that. Trump obviously will smuggle you in, Marco. Thank you. Thank you, Tiger. Marco Powell for Fed chair. It's so sad that you have to worry about what you say about Trump. I could see this with North Korea, but US, it's a shame and not how our constitution works. I'm not going to go into it. I don't think it'll create any problems, but it was just a little joke. BOJ intervention after the war ends. Possibly, they could be waiting for the war to end to do an intervention. We're not sure. Anyway, let's do the giveaway. So let me quickly get my Google Sheet. Let's see, today is the 27th. So it's a 10K one-phase account. 27. Okay, fine. Let's copy the names. We have some nice entries, which is great to see. Let's open up my Wheel of Fortune. Spin. And let's see what happens. So, Arthur or Mark? Arthur, Bernard, congrats on being the winner. I have your information. After my segment ends, I'll send you a free code or a code for a free 10K one-phase account. Enjoy and good luck. If you didn't win and you want to get a challenge, I want to remind you, code A1Live gets you 25% off. Okay? I'm going to do one more chart before I pass it on to Tiger. Just to wrap things up, Bitcoin seems to be going lower. Okay, so looks like Bitcoin is not the chosen one. It's starting to sell off. We are approaching the levels when the war began. So when the war began, 2nd of March, we started to appreciate, but now we're pretty much back to the initial level. So Bitcoin looks pretty bad. It's not the one. I was looking for possible buy setups, not looking at them anymore. Just wanted to comment on that. I'm keeping with the risk-off scenario. I'm buying oil. I'm buying the US dollar. I'm seeing what's happening. Off-ramps. There's no off-ramps anymore. It's now completely up to Iran to want to end the conflict, negotiate, and open the Strait of Hormuz. The US pretty much has zero influence at the moment about the conflict resolution. Thank you very much for watching. Don't go anywhere because you have Tiger coming on right after me. I want to wish you a great weekend, and I'll see you on Monday. Goodbye.
This next segment of the live stream is proudly sponsored by the one and only Ola Prime. Ola Prime is easily one of the most impressive prop firms that I've... If you are a swing trader and... This next segment of the live stream is proudly sponsored by the one and only Ola Prime. Ola Prime is easily one of the most impressive prop firms that I've come across with an incredibly professional team. They offer fast payouts within 1 hour, up to 95% profit splits. They have the largest number of trading platforms. I mean, just take a look at this list. They have MetaTrader 4, MetaTrader 5, TradeLocker, DXTrade, MatchTrader, and CTrader all available to their traders. And that's just for the Forex side. On the futures side, they have DX Futures currently with Tradeovate and NinjaTrader coming soon. Ola Prime has one of the widest selections for challenges and funded accounts that I've come across, with a wide range of account balances you can choose from, like 5 all the way to 200K. And just take a look at the variety of different challenges you can choose from to fit your trading style. They have a 1-step or 2-step pro accounts. They have the 1-step prime, 2-step prime, direct accounts, Ola Prime, 1 challenge. I mean, you have a wide selection here. And the reason this is so important is that you as a trader have a unique style. Everyone does. And finding the right challenge to meet your criteria is very important. If you go through their website, which I encourage you to do so using the link dropped in the live stream chat right now, you can explore in full transparency all of the different account types, all of the rules, etc. They also offer news trading and weekend holding, and they have direct and challenge accounts available. For a limited time, stream viewers get extra discounts using the promo code that you see on your screen right now, and also through the link and promo code being shared in the live stream chat. Take your trading to the next level with Ola Prime. Now back to the live stream.
All righty then. How's it going, everybody? Happy Friday. TGIF. Great day by default. All that fun stuff. Hope everybody's doing well out there today. I'm on the wrong chart. So the one asset, and as always, guys, let me know what specific tickers you'd like me to jump into, and I'll be happy to take a look at it for you from a technical, fundamental point of view. So, yeah, just let me know. But the one thing I was kind of keeping my eye on today was pound Kiwi. Now, I know that's given us a pretty good bullish signal, +9 over here. There's really 2 demand zones that I've been kind of arguing with myself in my head about this morning. We had finally broken through, if you guys remember, I think yesterday or the day before, I drew up this previous impulse leg that we had. And then we had created a new one. And then we finally had created a new one here. Okay, so I was basically looking at these two zones here. I kind of liked that zone at the 50% retracement area, but I also liked the fact that there's one a little cheaper down. So just going to a 4-hour chart, we can map out real quick hour. Make sure my goodies are on. Okay. Just mapping out our current impulse leg, we would be looking at this price action here. So again, here's that middle zone. And then here's the one, if my charts would quit disconnecting on me. Sorry about that. And then there's the one down here more closer to the 61.8 level, which kind of lines up with the old impulse leg that we had mapped out from back here. So kind of a resistance point, potentially becoming support inside of that demand zone. And I had drawn up, well, first of all, I drew up this arrow, if you guys remember the other day, just saying, hey, I need to break out. I need to break out above this structure and get a retracement somewhere for a push up. Why is my session disconnecting on me? I don't know why it's doing that, guys. Usually does it once or so, but not like 3 times in a row. Let me save this again. So where was I? Oh yeah. So anyway, we had broken that structure, closed, retraced, caught some demand and pushed up. Okay. Anyway, coming back to current price action, I was keeping an eye on this impulse leg right here. And I thought about taking a stab at this zone, and probably in hindsight, I should have, but I was in the middle of writing up my article, writing up my pre-market article over at FX Empire. So I kind of missed out on that. And as you can see, it looks like this one is the one that's kind of taken a little bit of a bid anyway, as far as pushing up. So it was kind of, but the thing is, it dipped below the zone. So it actually kind of dipped into no man's land. We're basically hiding between, not hiding, but just kind of piercing between the two zones. But ultimately, this one down here is the one that I was, more interested in, just mainly because it was a little bit cheaper, a little bit more of a discount. So it may very well run off and leave me at this point. But the last thing I want to do is chase it. Let's go down to some smaller time frames. And it's currently, we'll see. I mean, this, it's currently inside of a 15-minute supply as we speak. So could that push price back down for a possible second chance? It's possible. I mean, if I looked in this current leg up that we're experiencing, I don't know. Let's dig in a little bit. I mean, there's a pretty decent looking 30-minute candle, but the problem is if this zone, that 15-minute zone, if it pushes price all the way back, well, then that tells me that this 30-minute candle we're looking at probably isn't that strong. Otherwise, it would have pushed it through and chewed through all of these unfilled orders on that smaller time frame. So, yeah, I just talked myself out of it as we speak. So what I'm going to do, and this may not happen today, although pound New Zealand is the fastest, I think, moving currency pair as far as ATR, average true range. What are we at? 150 pips. So this thing moves 150 pips per average, or on average per day. So yeah, whether it hits today or not, hopefully it waits till Sunday. If on Sunday, when the market opens here, if we can get a push down and test this liquidity here, and bounce into this 4-hour zone that I'm looking at, then that's probably going to be the play at this point. Because, yeah, again, it may very well run off and leave me. But the thing is, again, it came all the way down to no man's land as far as the wick. So essentially, in a way, it renders that zone not that strong because it wasn't even strong enough to hold price up. It actually chewed through it. So I don't usually place trades on zones if in fact they do get wicked through like this, because the purpose of a zone, the point of a zone is it should hold the price and bounce in the opposite way, collect those unfilled orders and run up. So, or run up on demand or run down on supply. So yeah, but the plan now kind of shifts to just seeing if that was a little bit of a fake push up, and then we'll go for a push down and then a buy like that. So this is more of a, like I said, even though this thing moves quite fast, I'm not going to count on it making 100% is at about an 80 pip drop to bounce in to try to catch 100 pips or 120 pips. That's probably asking too much. It's 11 a.m. New York time, so that's only giving us, what, 5-6 hours? I don't math, I geometry, whatever that adds up to be. But yeah, this is going to be my new favorite play on pound Kiwi. Pound is obviously, it's gained some strength. It was in the it was in the cellar. It was in the basement for quite a while. Let's go have an updated look at it over here. Eco Surprise Index, the pound. Yeah, so we're still at 50%. Remember, that thing was down at 20% at one point just a week and a half ago or so, but it has gained a little bit of strength. And the Kiwi is the second weakest fundamental currency as we speak. So I like that. In hindsight, probably going to be, happy that I didn't take that middle zone. 50% fibs is obviously a very popular place to take trades, but you guys know me. I like the zones. And if I see a zone that's further down and given a cheaper price, I'll usually try hard to sit on my hands through this middle zone up here, this little bit more expensive zone, and wait on the cheaper zone down here. So that's my play on pound Kiwi. What do we got over here? 35%. Yeah, guys, Ola Prime, if you're looking for a new account, a new challenge, just like his commercial says, it's very, very swing trader friendly. That was one of the reasons that drew me into them, aside from them obviously giving me a gig last year to stream on their live stream. But even despite that, and even though I'm not even officially with them anymore, I still think that it's one of the better, if not the best, for swing traders as far as challenges, all the challenge rules that you have. Okay. I did see, I got an email the other day saying that they had changed if you purchase like a 100K funded account, in the past, they had a 15% consistency rule. I did see where they changed that. They actually upped it to 25% consistency rule. So that's actually a little bit of a game changer if you ask me on the funded account. In other words, you're skipping the prime challenge, you're skipping the pro challenge, the different, the different funding challenge phases, and just going straight to purchasing an actual funded account. That's actually a game changer, because almost all of the instant funded accounts I've seen across various prop firms out there are 15%. So 25%, I tell you what, I actually like that. I may consider jumping into it and getting me another one myself. I got 3 accounts though right now, and it's almost too much to take, it's almost too much to watch at one time. So I don't know, but that was a really cool thing that they did update. Euro pound, Tony, you want to see Euro pound? Yeah, let's take a look at that. I used to talk dirty about Euro pound just because it's one of the slower currency pairs that moves like molasses. It only moves about 37 to 40 pips on average per day as far as the ATR. I don't know, what is it currently? 34 pips. So yeah, it's gotten even slower. But I think it's one of those beginner-friendly type currency pairs, to be honest with you. I kind of joke about when you get your driver's license, you don't want to be driving a Lamborghini or a Porsche. In other words, you don't want to be trading necessarily the pound Swiss, like I was just looking at, moving 150 pips. Why not go trade something that moves a little slower, like it's a set of training wheels? In other words, you want to get your driver's license driving a piece of crap, right? Something that it's okay if you bump into a curb or whatever the case is. Drive a Ford Pinto or a Prius or something like that until you get licensed and get some knowledge, get some experience under your belt. And then you can worry about the Lambos later. So anyway, Euro pound is, still pretty well neutral. Just thought I would take a look at the kind of the compact setup over here. Euro pound, neutral. Okay, so -2 on this thing. As far as the smart money, dumb money relationship, let's see, we're at a -2 over here for the sentiment readings. We're at a +2 for technicals and a -2 for the fundies. So just a little bit of mixed signaling here. If it weren't for the trend being, if the trend were down, we'd probably be getting a bearish reading on this thing. But nevertheless, let's go have a look at it for you. So on Euro pound, what would make this thing flip bearish? Well, I don't know exactly how Nick has the moving average crossovers, which I know is one of the determining factors of, you know, that bar flipping as far as the trend part of the EdgeFinder. But my guess is if it flips below this double bottom, it might flip bearish on us technically, as far as that technical reading. But even just looking at a chart, I mean, we got a double bottom here. So I probably wouldn't be interested in shorting this thing. Well, number one, until the EdgeFinder gives us the permission. But just looking over here on a daily chart, and I know I got daily on both sides, but I would prefer to see a push below this double bottom. Okay, because if that's the case, we've got a clear downtrend. Because now we got a drop. You know, this is much higher time frame stuff, but drop, base, drop. Okay, so once we get down here, well, now we've got a former support that could be potential resistance, and that's this double bottom currently. So, you know, perhaps at that point we get a push back in, and, you know, maybe we could find a nice supply zone that has created itself in here. But even without the supply zone, you've got a clear former double bottom. So I could see price coming up and then looking to try to short the market somewhere in here. Now, this may not be anything that happens in the next couple of days, but I'm just saying, a little bit longer term, I'd like that. Because again, we've got this double, you know, this double bottom forming right here. In fact, I'm going to get that drawn up. Let's see. What about the left side? Okay. Yeah. I mean, if you pulled this a little further over, you know, you get start over here. You got a swing, you got a drop here, a spike up. You got a liquidity push down here before pushing up. Was this a, you know, just think about it. Back in time, was this a little bit of a, oh my gosh, I'm forgetting my terminology. A spring, okay? If we're looking at Wyckoff theory, did this act as a spring? Did this act as a little bit of a liquidity sweep before the push up? Possibly. But anyway, you fast forward that, and I'm going to turn this actually. I like to have my former support and resistance lines blue, and I like to have them with a dashed line. That way I could clearly see, clearly have those spots marked. So anyway, yeah, I say all that to say that without a bearish trend reading over here on the EdgeFinder, okay, I don't want to be touching that right now. Now, the argument could probably be made if I wanted, you know, if we wanted a front, well, no, never mind. Scratch that. I was going to say we did bounce into a supply, but did this supply zone, did it have the power to break through an opposing demand zone or a swing low? It didn't, because it's all down here. So it moved pretty decently. I mean, again, it's a slow moving currency pair. It did drop about 30 pips, which 30 pips on a 40 or on a 30, what I say, 34 pip ATR currency, that's not horrible. That's not bad. That's showing some weakness. But again, it's not just the move. It's did it have the power to break a zone or a swing low? And it hasn't done that. So I'm just going to completely wait on this thing personally. I mean, again, it's you do what you want, Tony, but if it were me, I wouldn't touch it unless we do what I kind of drew up here on the daily. Break the structures, retrace to the structures, and hopefully in here we can get a supply zone created, you know, on a 4-hour chart, on a 1-hour chart for a possible short. So hopefully that helps. Oil to 100 today. You know what? Yeah, if we take a look at some VIX activity over here, I know that we did get back up to the 30 level, which I don't know, guys. Everybody looks at the volatility index or the fear index a little different. To me, if it's like reach 20 or higher, it's elevated levels. But to get up to 30, well, now we're talking woo doggy. So that's kind of where we're at. Yeah, we're right at the 30 level right now. The Dixie's flying up. The 10-year yields, okay, they're flying up as well, although they have kind of retraced a little bit, but just your normal, you know, retracements. And then, yeah, floating into oil, like you mentioned there. The one thing I would warn about with oil is the fact that we are currently bouncing into a supply zone. This is 4 hours times a 4-hour chart. Now, this 4-hour zone, you guys can see this from 10 miles away. You can see that this big expanded range candle out, broke all these structures. A really nice form or support, if you ask me, which pretty much was created off a demand in here. You got a touch here, a touch here, a touch here. The supply zone said, heck no, we're going to chew right through you. So I'm not saying that this is enough, that this would be enough to push price down all the way to another support or a demand, but I could definitely at least expect some type of reaction. Maybe we come up a little higher, just get a push down, former resistance here. I don't know. It's too neutral, and I haven't really dug too deep into oil of late because it was in this sideways puke fest. Okay. But then the Trump tweet on Monday, we did get that break, the breather, the profit taking, the, hey, maybe this crap's going to end soon as far as the war. And then, of course, you had Iran saying, I don't know what the hell he's talking about. We ain't had no talk with him. And, initially it all bounced out, but it feels like, it feels a little more like risk off at the moment. I mean, let's go back to the S&P. There you go. Okay. I was looking at the futures earlier, but I hadn't had a chance to see the actual CFDs. But yeah, down on the stocks. Bitcoin down. So risk off, guys. We're clearly risk off. Now, with risk off would kind of mean a little bit the opposite for oil a lot of the time. So yeah, I'm good with you on that. I mean, I can't deny it. That 100 is right in the center of that zone, so will not shock me at all. Remember, supply zones, demand zones, especially on the higher time frames, they pretty much act as magnets. Prices, especially in we're talking oil here, but especially in FX land, prices overall are not like stocks for Forex pairs. They tend to, overall, everything goes sideways. You get clear trends in stocks, risk on type assets. In currencies, if you flip all the way out to a daily, weekly, monthly chart, depending on the asset, everything looks straight sideways. So it's just a lot tougher. It's a lot tougher to pick trends in FX land. I think we're part masochist because we decided to trade something that typically stays sideways, right? Does that make us masochists in here? I don't know. It's kind of the way I thought of it, looked at it. But yeah, oil 100, definitely. Bitcoin to 62,000, says Yoshi. Bitcoin to 62,000. I was looking at Bitcoin earlier and just taking a look in history. And I don't know if I pointed this out with you guys or not, but, just going all the way to a monthly chart. You guys, I drew up this monthly chart, monthly demand, which is this bigger orange box from this candle. And inside of this monthly, if we step down to a weekly, we have a weekly demand. And then if we step down from a weekly to the daily, we have a daily demand. And where did price bounce? Where did it bounce? Where did it bounce? Back at the beginning of February. Okay. It bounced off the daily. That was nestled inside of the weekly. That was nestled inside of the monthly. You want to talk about strength? You want to talk about confluence? Woo! Now, I got to say, it'd be brave, even with that looking so strong, it'd be pretty brave to be trying to catch this falling knife that we experienced for Bitcoin. Just the big, ugly, everybody's getting rid of their coins and everything. Now, we got the push up from that confluence. Yeah, but it's just been going sideways. Now, the cool thing that's come out of this is the fact that we did have a new demand zone, a new daily zone. Talking about this red candle here, followed by 10 green candles in a row up. That broke a structure, that broke above a previous resistance, or maybe that was a support. Yeah, support. Support from Liberation Day, guys. April 2nd, 3rd, 4th of last year. Liberation Week, Liberation Day. And yet this zone had the power to push through it and close on a daily. So that, to me, tells me that this demand down here is pretty strong. Now, we've already bounced into it, and we've already got to push up. And now it's rolling back down. So my wonder is, you say going to 62,000. I tell you what, I will 100% agree with you if it continues to break and close below the lows of this daily 4-hour confluence. We don't have that far to go. Right. So now we tested the bottom side of the daily, which pretty much also acts as a, you know, a little bit of a support over here. So if we close below, what is that? 65,600. Yeah. 62 all day, ladies and gents. Where are we at? We're 62. 62. Yeah. Yeah. Because at this point, and it could even go farther because it's already broken into the, like I said, the daily, the weekly, the monthly. It's already collected these potential unfilled orders. So it's a mitigated demand zone. So if we break to 62, hell, I could see it going all the way to what I put up here, 55. If we're just looking at the technicals. Now, you can't only look at the technicals. We got to obviously pay attention to what Trump and Tehran are doing and what hopefully they can cuss and discuss a deal over the weekend. I know that was a little bit of a rumor. It's kind of sad that we have to say rumor at this point because that's that you just never know. We hear one thing and then something gets pushed down the line. But anyway, supposedly Pakistan is supposed to act as an intermediary between Trump and Iran. So I don't know. We'll find out. That could obviously change a lot over the weekend. A lot of the stuff, magic, craziness, chaos. It seems like a lot of it happens over the weekends. So just a note on that and talking about the pound New Zealand that I was just looking at. That's why I'm waiting for it. Hopefully that to hit my zones on Sunday evening, preferably even Monday, because I am not trying to hold a trade open over the weekend. I'm a shorter term swing trader. I'm in trades typically 2 to 4 days. So when I have a stop loss on, they're usually 30 to 50 pips. And I don't want a market gap to gap 80 pips, 100 pips on the opposite side of my stop losses. And especially because a lot of stuff has come out over the weekends. When did the war start? On a Saturday. When did Trump bomb the nuclear sites last summer? On a Saturday. Right? So it's he likes things on Saturday. He likes doing stuff like that, it seems like. Gold is F10. Let's see here. Gold is ramping up 3% today. Let's see here. Is gold ramping up? Yeah. So as far as gold goes, yeah, we have bounced into a supply, but I would call this a minor supply zone, meaning it's not that strong because the zone pushed price down to a former support resistance line. I had drawn up the blue dash line here. But it got to bounce right back into it without even hitting anything too major. I mean, yeah, maybe you could look at this over here as a little bit of demand. But, yeah, I guess that's not bad. I mean, this zone over here did break structure and close. So, yeah. To me, this is all still just one big chop fest, guys. I'm sure I mentioned this the last day or two, but I'm still personally keeping my eye. Since we are still getting some, I think, still pretty decent. Okay, silver and gold have actually moved neutral again. So never mind. That negates that. I was going to say, where's my chart? I was going to say, yeah, I'm keeping an eye. I've got alerts set up here at, what is that, 4,600, 4,660, 4,600. Because that, to me, is the zone that I was currently looking at. More so this candle right here. But I just included the whole thing, as far as, putting a stop loss beyond it. So that's currently where I'm at for gold. I would love to see price go up through there. I don't think this zone here is going to be strong enough to hold it. This is the one I'm after. Now, if we happen to get any more, bullish U.S. dollar news in the next week or so, maybe we get another gold, silver bearish reading. I don't know. Let's take a look. We got some lip flapping sessions going on today, guys. FOMC member Barkin, he's speaking in my home state of Tennessee today. Some Appalachian, what was it? Like an Appalachian, where's my notes? Appalachian something. Appalachian, here it is. Appalachian Highlands Economic Forum. That title makes sense, being in Tennessee. So that'd be East Tennessee, where the Appalachian Mountains are. And then Daly and Paulson, they speak a little bit. They're speaking soon. Actually, they're speaking here in a little bit. San Francisco Macroeconomics and Monetary Policy Conference. So I love getting those readouts. Ladies and gents, I know yesterday Miran spoke, sounded dovish. Of course, that's Trump's pick. And he's, of course, arguing that current policy is holding the economy back. Vice Chair Jefferson was also in on the speeches yesterday. Outlook and energy effects. Governor Cook focused on financial stability. And then, like I said, we got Barkin, Daly, and Paulson. So it's just nothing but lip flapping sessions. Okay. The University of Michigan sentiment came in lower. Now they're still above the 50 baseline when we're talking about the consumer sentiment. Okay. The University of Michigan consumer sentiment still over the 50 line. So still in expansion, although they're slowly starting to creep down as far as the sentiment. So not the greatest look, but anyway, guys, my gosh, I rattle on and then I realize 30 minutes flies the wink of an eye. I'm out of the markets today. I'm going to try to get hardcore back into it next week. Now that I'm completely trained up on my job. Okay. So hopefully I can start getting you guys some more actual trades going on. But at the end of the day, it's just been too consolidative for me anyway. I'm not getting those extreme readings that I like to see. Okay. That's just my trading style. There's 100,000 ways of making money in the markets. I just seem to have picked the one that didn't want to give me any alerts this week. So anyway, traders, have a wonderful weekend. Stay safe, and we'll be back on Monday.
Thanks again for watching today's show. Our goal at A1 Trading is to continue to share free value to our audience through daily videos and articles, keeping you up to date with the latest market coverage. If you enjoy our content, make sure to subscribe for more. From all of us at A1 Trading, have a great day, and we'll see you next time.